Hi, this is Zak Mir with the US Chartbreakers here at Zak's Traders Cafe for Thursday, the 14th of September. Starting off with the S&P, and we've got a bit of a roadblock here against the 50-day moving average. That's the blue line there, around 44.80. Want to see an end-of-day close through that to then take us up to the next major resistance for this market, around 45.35. That's basically been post-August resistance. On the downside, risk of an uptrend line meeting around 44.10. And that's a line from the middle of last month. And obviously the nightmare scenario here is that we head back to the post-June support here, 43.30. Moving along to the stocks and follow through for the first stock here, Aspira. Here we've got a V-shaped bull flag, bear trap rebound from below the 200-day line rather, at $5. Above $5, we're looking for the top of that rising trend channel from back in March, as high as $9.40 as soon as the end of next month. Ideally now we stay above that 50-day line near the $5 mark. On to a stock which is not so familiar around here, and let's see whether we can get some charting insight on it. A rising trend channel here from Acri Capital Acquisition, and the top of the channel looks to be around the $11.50 mark. We're looking for that by the end of next month, while we hold above the 50-day moving average at $10.80. So relatively simple, if illiquid, situation there for Acri. On to a stock which is also on the front foot at the moment, Dianthus, and here a bit of a bear trap there, hitting that uptrend line from the beginning of the year, and that line currently around $10.50. Above that we're looking for progress within a rising trend channel from the turn of the year, as high as $19 by the end of next month. Obviously, if you're cautious, you wait for $13.20 to clear, which is post-July resistance for the shares. Next situation is one which is also worth the bulls looking at. Sunrise New Energy, little bear trap there below the $1.80 level. Above that we're looking for the 200-day line initially, maybe by the end of this month around $2.60, and then up to as high as $3.10 by the end of next month. But the key here, I suppose, is getting a decent end-of-day close through the 50-day line around $2.10 after the little bear trap below $1.80. Next is next on the list is Ecarx, and here we've got a falling wedge set up, bounced off oversold territory, basically retesting the support there from back in February around $3.10. Initial target here, the 50-day line, and the August resistance area around $4.70, and then maybe up to the 200-day moving average at $6.20 by the end of next month. MoneyLion is a stock we've looked at quite recently, and it seems to be bouncing now with a higher low above the 200-day moving average. That's around $16.30. Support on the start of this week has really come in around the old August resistance area, around $19, so above $19. Looking not only for a break of last month's resistance towards $24, but an eventual target here as high as $40, maybe over the next couple of months going into November, while we remain above that $19 area. New name for us coming up, Mainz Biomed, and here we've gapped through the 50-day moving average, one of our favorite setups, especially after the bear trap rebound from below April support at $3.20. The view now is that while there's no end-of-day close back below the 50-day line at $3.80, looking for as high as $5.30 by the end of this month. The rebound backed by bullish divergence, so lower lows for August, September, but a higher RSI trace in the oscillator window. One of the best performers of the recent past has been NextNav, and here you can see why. Unfilled gap, two gaps to the upside unfilled so far this week, which is pretty impressive stuff. Our initial target there around $5.10, second target there up to $6.30, and hopefully we'll get that over the next week or so. If you're a fan of the shares looking for greater glory, then you can see that resistance on the way down back at the beginning of last year was through $8, so maybe that is a target for the end of next month. Don't want to see any price action really back below $5 now, and the floor of the latest gap. Onto a stock which is living up to its name, and you'll see why from the daily chart. Rocket Pharmaceuticals gap through the bear trap gap reversal, gap through the 50 and 200-day moving averages. Recent resistance on the way down around $20.30. Above that we're looking for a November resistance line projection as high as $25 by the end of next month, and hopefully a bit sooner. We're following up on T-Stamp, which is going well at the moment after the retracement from the bull trap through $3 that we had last month. Current position is that we're bouncing after a bear trap rebound off the floor of this rising trend channel from April. Top of that channel is at $3.80, and we're looking for that as soon as the end of this month, especially if we can get a decent clearance of the 200-day moving average at $2.47 over the course of the rest of this week. Last stock of the day is coming up, and here we have Vigil Neuroscience. Here it's a bounce and a bear trap rebound off the floor of a falling trend channel from back in March, above the August support there around $5, looking for up to $8.60 by the end of next month. Bullish divergence all the way there since the end of July, so that should give momentum to the shares. And as I said, we want to stay above that $5 level. That's it from me today. More updates tomorrow.